Welcome to another deep dive. Today we're tackling a really big question. Can you actually achieve financial independence by age 43? It sounds ambitious, right? But this idea comes from a recent piece in Business Today. It really highlights the power of starting your investments early. So our mission today is to pull out the key nuggets from this source. We'll look at disciplined investing, SIPs, and that almost magical thing called compounding. The goal is to see how financial freedom might be, closer than you think.
Okay, so let's unpack this. The article basically says there are two main ingredients here: systematic investment plans, SIPs, and compounding. What's one detail about SIPs that article stresses that maybe gets overlooked sometimes?
That's a great point. I think what the article really nails about SIPs isn't just the investing regularly part. It's how they inherently use rupee cost averaging. You automatically buy more when prices are low, fewer when they're high. It sort of bakes discipline right into your strategy, smoothing things out, especially when markets get choppy. And crucially, it helps take the emotion out of it, which, as the article kind of implies, is often the harder part, wouldn't you say?
Absolutely. That behavioral side is huge. Okay, and then the source talks about compounding, often called the eighth wonder of the world. How does the article really illustrate its impact for someone who starts young?
Well, it makes it clear it's not just simple interest, it's exponential.
Yeah.
The article uses this case study, Sakshi, and shows how a huge chunk of her projected wealth actually comes in the later years. It really drives home how even, modest amounts invested consistently can snowball over time. Your earnings start generating their own earnings. It's quite powerful.
Right, that snowball effect. So building on that, the article gives us Sakshi's story to make it concrete. She's 28, earning $90,000 a month, which, by the way, is a good income where she is. And her strategy, it's pretty bold. She puts 50,000, that's over 55% of her income, straight into SIPs every month.
It really is quite something. And financial experts quoted, like Siddhan Garg, they really commend this kind of dedication. They see people like Sakshi as genuinely changing how people approach investing. Now, the projection in the article, assuming an 8% yearly increase in what she invests and a 14% annual return, her plan could potentially build up over 3.1 crore in just 15 years. It's a serious testament to sticking with it.
So let's think about what this means for you, the listener. By the time Sakshi hits 43, those big goals, maybe it's early retirement, maybe starting her own thing, or just financial freedom, they could genuinely be funded. It shows her mindset that consistency is actually more important than her starting salary figure, perhaps. It really hammers home that idea. Time in the market, not trying to time the market.
Exactly. And if you look at the bigger picture, Sakshi's approach kind of embodies the FIRE movement, financial independence, retire early.
Yeah.
But it seems like a practical, sustainable version. She's investing a large portion, yes, over half her income, and aiming for those long-term equity returns. But the article doesn't necessarily paint it as extreme penny pinching either. It suggests this more balanced, though still very committed approach might be easier to stick with long-term.
Sustainable is a good word for it. And get this, the source throws out an even more mind-blowing projection. If she keeps these SIPs going beyond that initial 15 years, her total corpus could potentially soar past 10 crore by the time she's 60. I mean, that just powerfully illustrates the sheer scale of long-term disciplined investing. So, in times when lots of people feel financial stress, stories like Sakshi's are quite inspiring. They act as a reminder that starting early, being intentional, and staying disciplined, well, it offers a real path to financial freedom. What's your biggest takeaway from this deep dive? Feeling maybe a bit inspired to kickstart or boost your own journey?
Yeah, it's definitely thought-provoking. And it makes me wonder, stepping back from the specific numbers and strategies we talked about, what deeper habit or maybe mindset shift do you think is the absolute most critical piece, for unlocking this kind of financial potential, even if you're starting with, more modest means? That's maybe something for you to mull over.